Over to you, Richard.
Great. Well, it's fantastic to be here. Thank you very much to BBGA and our chance to talk to your delegates, talk to the audience, and to talk in particular about the global market for all fixed wing activity and business aviation within that, and our view of where we've got to and where we're heading. So I am first going to share my presentation, which I'm hoping everyone now can see. And we're going to talk you through the story since the pandemic in March last year, March 2020. So let's take a look at the trend since then. And just a quick intro, the WingX is tracking all flight activity globally, all fixed wing activity. So that's across all the commercial airlines, the business aviation, the cargo, and the other activities. So the way we've started this presentation is to show these three charts which capture the trend in activity in 2020 going into 21 versus the previous year. So the previous year, that is kind of 2019, normality is the gray area. And you've got a couple of indicators here in terms of percentages, with the dark red one showing the trend in 2020 versus 2019, and the lighter one showing the trend so far in 2021. So that's just January and February. Overall message is remarkable resilience in business aviation, because if you look at the activity of scheduled airlines globally in terms of departures, 62% decline in 2020 versus 2019, still 50% down so far this year. Business aviation down by 26% in terms of sectors flown in 20 versus 19, and just 10% down so far this year. Cargo is another remarkable sector which has actually seen some growth in the post-pandemic stage. Let's also look at the excitement around the business aviation industry. So I'm just picking a number of examples here, but what we've seen in just 3 or 4 months is an extraordinary sort of wave of investment coming from private equity funds and infrastructure investment funds. We've seen consolidation within the industry. We've seen this emergence of the SPAC vehicle for a number of new ventures, sort of crisscrossing our sector in business aviation, but also this emerging advanced aviation sector. So there's an awful lot of excitement, an awful lot of money coming into the industry to back up new initiatives, and sentiment-wise, we're looking very positive. And what I've illustrated here is the latest Barclays monthly trend, which picks up 55% positive outlook across the industry, and that's backed up by JetNet IQ, which is seeing over 50% now, expecting the industry to rebound in the next 12 months. And indeed, Corporate Jet Investors Conference just this month saw a combined 90% of people being slightly optimistic or very optimistic about the industry in the next 12 months. So resilience backed up by excitement. Let's just take a step back and look at that business aviation activity globally, because there's a lot of divergence between different regions. The major story is that North America is looking stronger and stronger, closer and closer to normality. That top left-hand chart tells you that in terms of sectors flown, biz-av sectors, that's jets and props, we are within 8% of pre-COVID. In Europe so far this year, we're still looking at 27% decline, and as you can see, there's been a relapse. If you look at that black line, which is marking the 7-day rolling average, there's been a relapse. Other parts of the world are really interesting. I mean, South America has actually seen an increase in the use of business aviation aircraft this year compared to Jan-Feb last year. Asia is still down by 11% in terms of hours flown, not so much in terms of sectors flown. So that's the global picture. Now let's take a look at just some countries in Europe. And what I've done here is I've looked at scheduled aviation and business aviation. So scheduled aviation is the left-hand axis, sorry, the right-hand axis, business aviation, the left-hand axis. The important message is that business aviation is more resilient in all these countries. So you can see that even in the UK, where there's 58% decline in business aviation so far this year, we have seen even more decline in scheduled aviation. Interestingly, there are at least a couple of countries there, Russia and Turkey, which are seeing more business aviation traffic in 21 than in Jan-Feb 2020. So in contrast to the declines in scheduled activity in those countries, we're actually seeing an increase in BizAv activity this year. Again, taking a step back, I want to look at the OEMs and see how their fleets are responding through the pandemic. So this is 2020 to 2021, so really over the last 14 months. And unsurprisingly, the OEMs with the light and mid-sized fleets are seeing more resilient activity than the large cap and long range. So the Textron fleet, the combined Hawker Cessna fleets globally, 18% reduction in flight hours and 600,000 fewer sectors. So it's certainly a big chunk taken out. But compare that to Gulfstream and Dassault, where flight activity has fallen in terms of flight hours well over 30%. Overall, we're seeing light jet segments down by 14% over that 14-month period, which is a lot more resilient than the heavy and ultra long range jet fleet. We're also seeing that that flight sectors in the 1.5 to 4 hour sector, that's where you're getting most resilience. Those are down by 12%, whereas the 4 hour plus are down by 30 or 40%. So the same holds over the other OEM fleets. Embraer relatively resilient with that exposure in the light jet sector, whereas clearly, you know, Boeing at the other end of the scale has taken a large hit. The Pilatus fleet has been very resilient. Indeed, the PC-24 activity has actually increased by 50%, but then, you know, so has the fleet. Let's take a further look at the European view this year and in the context of last year as well. So that magenta line at the bottom is showing a 7-day rolling average in daily activity in Europe since January the 1st, 2020. So you can see the very big dip, you can see the recovery. In fact, in August, there was more activity in 2020 than in 2019 in business aviation aircraft. And then the relapse, not acute, but clearly a relapse since the end of the year. What's interesting about this year is to see those big red circles in Western Europe showing large decline where most of the activity is, and then to the east, growth, that is more activity in Jan, Feb 21 than in 20. So not just Russia and Turkey, but a whole host of countries there. So the UK is the one that's really suffering. It's just got 8% share of business aviation, normally has double that, and showing 58% decline so far this year. Again, another view of the European picture. This time we're looking at metros, we're looking at city hubs. So what we do is we aggregate all the airports around the city, and then we look at the flight activity, business aviation flight activity from those cities. So again, as the map would suggest, what we're seeing is that the big hubs in Western Europe are seeing the toughest period so far in 2021. So all the London airports together, they're seeing declines of 65% in flight activity. Moscow is flat. That's the exception in terms of the large city hubs, because the other ones are also seeing quite severe declines. And then you start to find the exceptions down the list. So Istanbul has actually seen an increase in flight activity, so has Kiev, and so has Athens. Just a moment to look at the possible Brexit effect. What we're looking at here is G-registered aircraft flying AOC from UK to EU member states in the Jan-Feb period of this year. So I've compared it to Jan-Feb 2020 and Jan-Feb 2019, and you can see the precipitous decline. You can see that in Jan-Feb 21, there are 74% fewer of these flights, of these AOC G-registered flights, than in Jan-Feb 2019. And we calculate that's a run rate of about €1 million less in charter revenues each month due to this traffic loss. I also wanted to show you that we are tracking revenue loss not just for the operators, but also at the airport level. So what we've looked at here is the airport charges, the typical airport charges across landing, parking, handling, nav, at a bunch of airports, 3 in the UK, 3 in Europe, for the first 2 months of 2021. So we're working with Aviation Data Solutions here in terms of matching research on the actual pricing of these services at these airports, matching it to flight activity and calculating the loss. So we estimate that there's been a loss even in Jan-Feb of 6 million just at these 3 airports in terms of airport fees. Much lower loss at the European airports, albeit still substantial. The interesting thing is that we're also monitoring the NOx emissions and the decline in those, obviously due to the decline in traffic. So very large numbers in terms of decline in emissions. So that at least is somewhat silver lining. I want to talk about the way in which business aviation is eating into scheduled aviation and how that might open up a larger market for our sector. So what these charts show is global, then European, then UK view of the share of business aviation of all fixed wing activity. So the black line shows since January 2020 through to February 21, what is happening to the share that BizAv has of all fixed wing activity. So that's the right hand axis. So in all cases, you can see that black line has gone up. And indeed, on a global level, we started with 7.5% of all fixed wing activity. We've now got 17%. In the UK, it's actually even higher, but of course that says a good deal about the state of commercial airlines right now flying out of the UK. But BizAv is representing 19% of all that flight activity in fixed wing aircraft. So I want to illustrate this in terms of some of these metro hubs, just to show you how much we are seeing business aviation filling the gap in scheduled aviation cutbacks. So the two maps, what they show is business aviation on the top left and scheduled aviation on the top right. And what we're showing is green means growth in terms of destinations from this city hub, and obviously red means decline. And this is for the 21 period, Jan and Feb. So if we start with Colorado, Colorado is an interesting one because it's had growth really throughout the pandemic and is 1% up this year in terms of its top 20 destinations. Whereas scheduled outbound from Colorado is down by 29%. So that's what all the red on the right is. And you could pick a number of examples. But if you look at BizAv going from Colorado to Phoenix, for example, BizAv is up 11%. And on the same route scheduled is down by 27%. And that follows through a whole number of other examples. I won't spend too long on them. We can share this information afterwards. But take Istanbul, we've seen BizAv outbound up 13%, scheduled down by 48%. And we've seen precisely the scheduled activity fall away, let's say, Istanbul to Moscow, whereas BizAv is up 5% on the same pair. We can see it in Moscow too. We see the very big increase in BizAv activity from Moscow airports to Dubai, with scheduled connectivity on the same routes falling by 74% in the Jan-Feb period. From the Caribbean, we're seeing the same sort of patterns. Scheduled outbound down by 52%, but BizAv is up, and in particular from Miami, where scheduled connections are down by 43%. And even in Europe, and here I've got the 2020 view, even in Western Europe, where we've seen so much decline, BizAv is much more resilient. So from Munich, BizAv activity down by 30%, but scheduled outbound activity is down by 89%. And if we looked at a number of metro pairs like Munich to Cologne, Hamburg, Baden-Baden, we are seeing BizAv replacing schedules which have completely disappeared. Last summer, we saw flights from Munich to Orbia up by 45% on BizAv, with the scheduled connectivity dropping almost 70%. So in the last section, I want to look at the rise of charter, because I think that this is clearly where the resilience is coming from. Here we're looking at 2021, so the long span, 14 months. What's happened in terms of the different operating models for business aviation aircraft? So we've seen the charter over that period, the charter operators are flying 17% fewer sectors. The fractional operators 23% down, and similarly the management companies also flying well down. Private companies, that is flight departments, corporate flight departments and owners, almost 30% down. So it's clearly the charter activity which is giving most ballast to the recovery. And if we look at that across segments, we're seeing really pretty resilient activity in the charter market in mid-size and in light, Challenger 300, Phenom 300. You can see the VLJ there on the top right, down by 10% over the 20 to 21 period. And indeed, there are a couple of types of aircraft that are actually flying more than pre-pandemic, the Nextant, the CJ3, the Caravan. And just as one example, Florida, to take back the same map style here, if we look at 2021, Florida has got more activity, more charter activity, that's the theme at the moment, than it's ever seen before. We've seen 20% increase in charter traffic out of Florida compared to the Jan-Feb 2020 period. And if you look at the routes here, what's interesting is that connection to the New York area. So there have been 1,500 business jet charters from Florida to New York so far this year. That's 32% more than the Jan-Feb period in 2020. So let's have a look at a couple of operators just to see how that's reflected. So these are the operators that appear to be driving a lot of the resilience in the charter market over the whole period. We've got Air Hamburg, for example, in Europe, which is pretty much steady as it was in the preceding months of the pandemic. JetLink, similarly, actually sustaining activity throughout this period. And the ingredients, you'll be more familiar than I am with them, because many of you are running charter operations. Is the importance of clearly competitive pricing, a lot of emphasis on digitization, on yield management, on floating fleets, and indeed acquisition of rivals as these charter operations start to get scale. The complications come when you've got a big international operator like VistaJet, because of course they have to deal with the exposure to long sectors, which have obviously been reduced far more severely. You've got the international connections, the geopolitical tensions. Whereas take ExoJet, its other half in the US, which is flying domestic operations mainly, a lot of point-to-point pricing, making the most of the demand for getaway destinations, introducing lighter aircraft, and actually seeing growth in activity. I just want to finish this section with a little case study on GlobeAir. So GlobeAir is obviously the operator of VLJ, the biggest operator of VLJ aircraft around the Mustang, and we've been working with GlobeAir and just looking at what's changed in terms of the pattern of their flying. So the map clearly gives you the impression that this is, might be a company operating out of Linz, but it is floating its fleet everywhere. And what we find interesting is that if we look at the types of trip, that pie chart is showing pre-pandemic. We're now seeing 50% of their trips are one way. And again, the booking channel, that's pre-pandemic, showing sort of 40% direct sales. They've now got over 50% direct retail. So they've picked up that direct transaction channel with passengers, and they've increased market share accordingly right across this peer fleet from 36 to 49% over the period. And again, if we look at a few other indicators, what I find interesting is the number of passengers on boards is up quite substantially, but look at the requests per day. Requests per day are up by 130%, more than 130% since the pandemic started. And indeed, flight hours have increased over the entire period, whilst price per hour has actually stayed resilient, even slightly increased. What I find interesting about this set of numbers, which is since June 2020, is that GlobeAir is actually getting more requests now, more transactions from the business sector. The reason for that is really since the end of last year, as you know, it's become very difficult to fly, certainly cross-border for any leisure trip, whereas essential business trips are now able to fly those routes, and therefore fulfilling most of the demand. So I'm going to complete with our view of where we are, where the industry is, and where we may be heading. And of course, it's very early. We're still the tip of the iceberg in terms of how the pandemic plays out in the longer run. I think at the moment, the key question is, what is the trade-off between the rebound in the economy and a lot of confidence around that, and the fact that corporate travel has been so denuded? Because if we look at the rebound, it's really looking quite rosy. Yesterday, the Knight Frank global report came out. It showed that ultra high net worth wealth has actually increased in the last 12 months but double digit in Asia, and it has a very strong path ahead. 20-30% increase over the next 5 years expected there. We're going to get a strong growth in rebound according to the IMF in the global economy. The problem is, if you look at previous crises, and that's the bottom left-hand chart, we can see just how far corporate travel lags those recoveries. So leisure comes back first, corporate travel takes a lot longer. And indeed, Bill Gates is talking about 50% of business travel actually disappearing in the longer run. But it may well be that the leisure travel is enough to offset that, at least in the short term. This is a little glimpse of what happened at Christmas, because I think it emphasizes just how much of a rebound there was in leisure travel during the holiday season. Once that pent-up demand was allowed out, we saw more traffic over that Christmas period globally than ever before. It was really a record number, but very concentrated just over a few days. I think the other key factor is how much does business aviation, as we saw in the earlier slides, continue to fill that connectivity gap. So what this chart shows, the grey boxes are showing what is the ratio, how much more does BizAv offer in terms of connections than scheduled, in terms of number of unique airport pairs. And we've seen that increase 30% over Q4 last year. So we've seen that ability to make connections increase 30%. And all the sort of anecdotal information is indicating that the airlines are going to pull back on networks through 2021 for sure, probably through 2020. In the latest report from Lufthansa, we're expecting to see just out today that capacity will only be at 50% of 2019 in 2021. So there's an enormous gap there for business aviation to fill. Business aviation, we think, is heading for a cyclical recovery. We think it's got some important factors on side. You know, the vaccinations seem to be working through. There are complications. Things won't open up as soon as expected, but there's still that momentum in passengers looking for you know, looking to avoid health hazards, avoid shared spaces, and as we've discussed, we've got the eroded scheduled connectivity to exploit. Against that, you've got the economic tsunami. If it materializes, if and when it materializes, that's clearly going to hold back demand. We see activity this year, and this is just in Europe here. We see business aviation activity coming back within 10% of normality. So that's not compared to 2020, that's compared to 2019. The blue dotted line is our sort of more optimistic forecast. The dashed line is less optimistic, and I'm actually comparing that to the green, which is Eurocontrol's, and that's Eurocontrol looking at scheduled aviation. So you can see how far they are behind business aviation. And you know, that plays out globally, we think, by region, and this is business aviation as such. In other words, just taking a couple of numbers, we think there's going to be an 18% bounce back compared to 2020 in terms of business aviation sectors, albeit that still leaves us 6.5% short of where we were in 2019. So to finish up, you know, I think the longer term view, and of course this is speculative, is what is going to happen in terms of secular changes that may change the way in which BizAv provides connectivity. Because, you know, we could be taking a step back on a number of factors. Deglobalization could really hurt, particularly in long sector aviation connections. Environmental challenges are clearly come to the top of the list, and that could be a toxification for our industry sector if we're not careful. But they could be managed, and in the meantime, there are some very positive factors. There's clearly a lot of new money coming in. There's consolidation. There's efficiency. There's a change in lifestyle behaviour. Maybe less corporate travel, but new BizAv users coming into our sector could now stay there. And of course, we've got this huge background, which is the rise of on-demand aviation and advanced air mobility, which could really, with new technology, introduce our sector to a huge new market. So I'm going to just conclude on these points. What are the main points that we've picked up today? In our view, first of all, resilience of non-scheduled aviation is remarkable, particularly in business aviation. It's been strongest in big domestic markets, the US, Russia, Turkey. Light and mid-sized fleets have seen the most resilient demand. Charter operations have really provided the ballast, especially the bigger airlines, building up scale in the charter business. And we do believe that there is evidence already, although it's early stage, that BizAv is supplementing eroded scheduled connections. So therefore, we've got a pretty optimistic view in the longer term for our sector. And on that note, I'll finish, and thank you very much.
Richard, thank you very much. I think what you've given us is an extremely comprehensive picture that probably many people have been thinking about, but you've captured it so that everyone can really see what is going on. And I'm not going to say it looks super rosy, but it does look like a good positive start point for us as a community, but not something to be complacent about. We haven't got any questions that have come up, and actually I want to try and keep us on time. One of the things that I would just ask very quickly, you alluded to changes in behaviour and culture, and it's something we were talking about earlier, and that is the change of business practices. are you seeing any language or anything that's coming through about people changing the way they're going to do their business, and therefore how they may choose to use aviation to support that in the future?
Well, we can really only infer from what we see in flight plans and flight records, besides everything that we hear from all our customers, in particular the operators. But just, on the first point, in terms of flight records, Mark, just take that pattern that I showed in Florida in the charter market. I mean, look at the track between the Northeast, between the New York area and Florida. Clearly there's the emergence there of sort of hybrid commercial shuttles, effectively, with a lot of migration out of dense urban areas. A lot of people actually moving down for the continuation of their work to Florida. So that might be a pattern that we see more broadly as things open up. I mean, certainly what a lot of our customers are telling us is that whilst not all the new users are going to stick in the industry, a lot of their customers from pre-pandemic that would use BizAv irregularly will now be using BizAv for most of their travel. So I think that that's also very promising.
Okay, look, that's brilliant. In case you missed it, there are quite a few emojis up there giving you a clap, so you would have had that feedback a little better in real life. Thank you for pulling together that presentation and sharing it with everybody. I'm going to end the session now, and we'll come back in a couple of minutes with a discussion on something that we absolutely need to support what Richard was presenting to us. So we'll be back in a moment to talk about the permitting process with our colleagues from DFT and CAA. So thank you very much, Richard.
Thank you very much, Mark.